And now it's time for Development Debates, where we dig deeper into some of the questions shaping the future and present of China. Today we will see Chinese experts discuss China's CNR and CSR Corp's integration. 14 years ago, China National Railway Locomotive Rolling Stock Industry Corporation was divided into two independent companies known as China CNR Corp Limited and CSR Corp Limited. Now, on October 27th, these two top Chinese train manufacturers have suspended stock transactions and announced they will resume trading in 5 days. On October 31st, they issued a statement saying they are trying to resolve major issues for protecting investors' profit and avoiding abnormal fluctuation. Thus, they would continue the trade suspension. The suspension is not supposed to last over 1 month. It is said CNR and CSR Corp are planning to merge as the country attempts to avoid cutthroat competition and promote its high-speed train technology abroad. The question of whether merging is a good idea or not has been discussed a lot among the public, and now many experts have weighed in on the issue. An experienced rail worker spoke to National Business Daily, saying the merger is better than division. The rail worker explains that during their division, excess capacity was a big problem. In 2009, railway investments exacerbated excess capacity. Fixed asset investments in the Chinese railway system that year exceeded the total investment amount of 10 years, from 1996 to 2005. However, CNR and CSR experienced their most rapid growth period during that time. Furthermore, the growth rate of CSR in 2009 was 30% and then 40% in 2010. Yet the growth rates of these two train makers all declined by 2012, and they had less orders than before. What's more, nearly 100% of orders were from the Ministry of Railways, so the excess capacity situation became more severe. The two companies predicted they could produce 80,000 to 100,000 lorries per year. However, the market only needs 30,000 to 40,000 lorries. Another serious problem of division is intense competition. Because the need for railway orders has declined and the two companies are required to increase their performance growth, they move their competition overseas. And because of the severe competition, they price their projects abnormally low to attract buyers, which made foreign enterprises doubt the credibility of Chinese enterprises. Additionally, corruption issues also emerged. Conversely, some firmly oppose the merger. A journalist from taijing.com.cn doubts if a government merger between CSR and CNR is good. He even thinks if this merger occurs, perhaps in the future large-scale bank mergers will follow because of similar reasons. He lists 4 points to support his argument. First, he believes the dilapidation of State-Owned Assets Supervision Administration Commission of the State Council, or shortly known as SASAC, caused this cutthroat competition, not CSR and CNR themselves. SASAC is in charge of regulation. Second, the merger will only result in worsening the situation since conflicts already exist within the two different companies for cultural reasons. Moreover, there's no need to improve technology via merging CNR and CSR. In the past years, the two companies have improved a lot by competing with each other, so they can continue this way in the future. Lastly, after a merger, a monopoly situation may be a problem. Thus, foreign competitors will investigate when they take part in international market competition. This will definitely do harm to internationalization of Chinese railway companies. In addition, consumers in China will also suffer if they raise the ticket price because of a monopoly. There's no doubt that the Chinese government wants to build a better railway industry for not only China's economy, but also Chinese consumers as well. However, since there's still doubts and questions among the public, the Chinese government may need to think twice before they take action.